is not QE, right? I mean, but for markets, I
Yeah.
mean, reserves are reserves and liquidity is liquidity. So is the Fed really tightening if it's ending balance sheet runoff? Is it quietly
Mhm.
buying bills just to keep this functioning? What are your thoughts?
Yeah. I love it when they say it's not really QE, like it's not really inflation, it's transitory inflation. It's not really a recession. We've changed the definition midway into a recession. It's not really QE, it's just another, I think, lie. I mean, even the very CPI scale that we use to measure inflation, again, everyone on Wall Street knows that's, as I've said so many times, as bogus as a 42nd Street Rolex. Again, this is another sign of the desperation of a regime or an empire or a system that's breaking down, not ending, but breaking down, losing its hegemony. You have desperation, but one of the key symptoms is dishonesty. The very CPI scale itself is dishonest. The very term quantitative easing is dishonest. The very notion of modern monetary theory as a solution to solve a debt crisis with more debt paid for with money printed out of thin air. These are all dishonest things. And to call QE that's not QE is dishonest. We've had backdoor liquidity through the Treasury General account. We've had backdoor liquidity by issuing more from the short end of the yield curve. We've had backdoor liquidity in bailing out the repo markets over and over again since 2019. There's plenty of liquidity for Wall Street, Jeremy, is what I'm trying to say. It's Wall Street socialism and Main Street feudalism. If you're on the inside, it's a great way to front run this. If you're trying to make it, you're out of the party. And yeah, it's absolutely more liquidity to come because we have no other solution. We're never going to grow our way out of debt at 120% debt to GDP. That's mathematically impossible. We've known that since the 1700s. Gresham or Thomas Gresham, this has been known since the 1500s, the 1700s. It's nothing new in history. You debase the currency to get your way out of debt. It's an invisible theft, and you inflate your way out. So you need to run inflation higher than interest rates. But the way the thieves do this in DC is they just lie about the inflation rate. They tell you you've got real positive yields when in fact actual inflation is much higher than the rates, and that's running negative real rates to inflate away the debt. That's great for Uncle Sam again, but that doesn't help the man on the street who measures his or her wealth in dollars that are melting right before their eyes. It's a very slow death by 1,000 cuts of the purchasing power. And it's a slow form of robbery that eventually leads to social unrest and eventually leads to more centralized control from a government that's afraid of losing its powers. They're more afraid of pitchforks than they are anything else, but they avoid that by distorting the data and inflating things out without really adequately reporting the inflation.